All right, good afternoon, ladies and gentlemen. Welcome to today's webinar hosted by International Department of Nanhua Futures. My name is Chen, and I'm here at Nanhua Futures in Hangzhou, China, and I'm greatly honored to be the host of today's session. Today, we will be focusing on the development of China's QFII-RQFII system and interpretation of market opportunities. 2 months ago, the Chinese authorities issued regulations on the QFII and RQFII investment in securities and futures on the mainland China, which basically loses the QFII-RQFII entry criteria and the scope of investment. Starting on November 2nd, QFII and RQFII will be allowed to invest in private equities, financial futures, commodity futures, options, and etc. So today we were honored to have invited experts from all around the country. They're Jimmy Pan, Peter Xu, and Alex Zhang. In our first section, Jimmy will give her opinion on QFII and RQFII's access to the Chinese market. Jimmy joined the Standard Chartered Bank in April 2010. In the past 10 years with the bank, she has been dedicated to transaction banking products, including cash, trade finance, and later security service. She has been leading the agenda of both China inbound programs for overseas investors via QFII and RQFII and CIBM, and outbound programs for domestic investors via QD and OD. Prior to Standard Chartered Bank, she worked as a project leader at HSBC, covering both retail and corporate products and initiatives. Hey, Jimmy, can you hear me?
Yes, I can.
All right, so we are super happy to have you here today, and just let me know whenever you're ready.
All right, thanks. Thank you for the introduction.
All right.
And welcome all to join today's session. Can you hear me? Hi, hello, is it okay?
Yeah, I can hear you.
All right, I'll go ahead now. Thank you everyone for joining today's session, and thank you for your interest to China market. Today, I'll go through the latest changes of China market, including QFII-RQFII. As just briefly introduced by Xiaoyu earlier, there is a bunch of new relaxation from the CSRC, which is the China Securities Regulator. Before I go ahead, I'm just assume that today, with all the clients here, you are probably familiar with China market, or you at least know the basic idea of what QFII and RQFII is. So I won't just cover those basic idea or concept of QFII and RQFII, but focus on the latest changes. But if you have any questions on the existing program and what history is, you may just let me know later or after this meeting. I can give you a separate session or answer to all your queries. So let's start with today's session. Can we move ahead to page number 1? Thank you. So talk about the QFII-RQFII recent relaxation. It happened in September earlier this year and effective on November the 1st. Actually, the changes have been expected by market for long because there was a consultation paper back in 2019 in the January. So basically, it's been over 1.5 years before the regulation become effective. And what attracts the market most, of course, is the investment scope. We will cover that very soon. So let's basically see how many changes are made, a basic or key changes made in the new relaxation. The first one is combining measures of QFII and RQFII scheme. So QFII and RQFII are well known to most of the international investors. They are basically two programs with the first one, QFII, is investing into China in foreign currency, and RQFII is investing to China in renminbi. But now these two programs become together. So in the future, for foreign investors, it will be much easier to understand. It's just QFII program. It doesn't have to choose between QFII or RQFII, or just call it QFII from now on. And the whole application process has been largely reduced. And we will see how that was reduced in the later page. But now let's go on with the number 2. Number 2 change is the relaxation qualification requirements. Previously, there was quantitative criteria for QFII applicants. And now the applicant qualification between QFII and RQFII are aligned. There's only one set of criteria, which is very general criteria to foreign investors. No more quantitative criteria. We will see that as well in the next page. And the third one is optimizing management of intermediaries. This is also important to foreign investors because previously only one custodian onshore is allowed and 3 brokers can be appointed by QFII. Now the restriction on number of custodians and brokers are all removed. Okay, here comes the last one, which is expanding the investment scope. And as I mentioned, this is most attractive to foreign investors. And we see the trend that overseas investors started to increase the investment into China. And some of the new investors who never come into China are also extracted by the relaxation of investment scope. So now we can see all the new products opened to the foreign investors, which are listed here, including the bond repo, margin trading, security financing, securities lending, etc. Let's move on with the next page, which page 2. It has a detailed explanation on all these investment scope and products. So now you can see the eligible investment instruments for QFII and RQFII under different markets. By market, I mean the exchange market or bond market. So let's see, we have some category here. For those items, those products without any color, those are products already open to foreign investors before the relaxation. And for those highlighted with light green, are those products or instruments effective on day 1, which is November the 1st. And for those marked with a gray color, these are the products available in the regulation or relaxed by the regulation, but the readiness of the product was subject to the overall market's operational readiness. So basically what you can see here is those products in white and green are already opened, but those in gray will need to wait for the operational readiness. Sorry, I see myself muted. Did you, sorry, can you hear me?
We can hear you.
Yes, we can hear you.
All right. So still go on with, yeah, let me finish page 2. We might take some time to go over the products by exchange. First, let's start with the CIBM, which is the China Interbank Bond Markets. For CIBM, I think some of you may know that we have another program called CIBM Direct, which means that for the client who focus on the fixed income market, they can actually join the CIBM program. But now with QFII relaxation, we see that the investment scope for CIBM under QFII and direct CIBM program become very much the same. So previously, why the client would choose CIBM Direct is because CIBM under QFII-RQFII only opens cash bonds for the foreign investors. But starting from November the 1st, all the investment or instruments under CIBM Direct are open to QFII clients as well. Let's look at in a deeper step. For example, let's see for investment rate swap, bond lending forward rate agreement. That can be done under QFII program starting from November the 1st. And what I want to highlight here is for bond repo. We actually can see 2 bond repo here. One is under CIBM Direct or CIBM, and the other is under Stock Exchange. These are two different bond repo. Under CIBM, it means the bond repo for bonds bought in CIBM market. But for bond repo under stock exchange, it means the bond repo for bonds bought under stock exchange market. So these are different markets and different instruments under these markets. For bond repo under CIBM, the status now is it's open to central bank type of clients, RMB offshore clearing bank, and participating banks only. So it's open, but open to limited investors, only to central bank type of clients and overseas clearing bank and participating banks. It's not yet open to private sectors. But for bond repo under stock exchange, it's not yet open because we need to wait for the operational readiness. So for private sectors, we understand a lot of them very keen to invest into or wanted to do bond repo, but so far they're not able to do it either under stock exchange or CIBM. But we wait for the market to open it to the private sectors in the near future. So after CIBM market, let's move on to the stock exchange. For stock exchange, we see that day one, the securities lending product is already ready and it's launched. We see several test cases already in the market, live cases already there. So it's fully open. But for other products, I think for the investors who are very keen to do margin trading, securities financing, and they need to wait. But we see that margin trading and securities financing could be the first set of products to be launched after maybe earlier next year. So this is the expectation from the market. We see there's some progress made and market testing will be arranged very soon. Now the rest of exchange markets or markets on the right could be very keen for the audience today because we touch the future products and this is the forum arranged by Nanhua Futures, right? So under CFACTS, stock index futures are the existing products for foreign investors. CGB futures, stock index options will be opened when the market is ready. We see a lot of investors keep asking when CGB futures will be opened. We don't know now, but we think it will be soon, probably next year. And commodity exchange with commodity future, commodity options will also be ready. And the rest of the products under others, we see that private investment funds, segregated accounts, and NIC are ready on day one. Especially, I want to mention the private investment fund is because for QFII investors, they are now allowed to invest into those private investment funds, including those funds established or launched by their own WFII PFM. What we call WFII PFM is the wholly owned investment managers onshore arms to launch those private equity funds. So this will be one of the products under their allowable investment scope at the moment. So these are all the investment instruments ready or to be ready for the QFII investors. Okay, now let's move on to the next page. Page 3, here's a comparison between the old regulation and the regulation after November the 1st. So what we see here is previously we call it QFII-RQFII because these are two programs, and now we just call it QFII because all the qualification requirements and regulation rules are actually aligned. So the first one, we mentioned it earlier, about the eligible applicants requirement. Previously, there are different eligibility requirements, especially those quantitative requirements for QFII clients as listed here, about tracking record, AUM, net assets. Now they are all removed. So what's left there is only the generic requirements for all QFII clients. I can briefly read aloud to you here about the requirement. It's about your sound financial conditions, managerial person in charge of the domestic investment, sound and effective governance structure, operation in compliance with the relevant rules and regulations, and no significant impact to the domestic capital market. These are all very generic qualification, which means that if you are a qualified foreign institutions in your own local market, you are probably qualified for China QFII program. The next one is about the license approval turnaround time. Previously, as we see that for QFII, especially RQFII, it could take you 2 months to get approval from CSRC, but now the official approval time from CSRC is reduced to 10 business days only. The next one is PRC intermediaries, which I covered earlier. No restriction on number of custodian banks and number of brokers you can choose onshore. You just can choose as much as you want. Yeah. With that, let's move on to page 4. Okay, page 4, starting with the investment currency. I mentioned earlier as well, there was different investment currency requirement for QFII-RQFII, and now it's removed. So you can either choose foreign currency to invest into China, or renminbi and offshore CNH to invest into China. They are both allowed, and it doesn't matter whether you choose any program, it's just under QFII program. And there used to be different quota amount or quota management rules, and these are all removed. There's no more quota for QFII-RQFII, and you don't have to monitor the investment quota anymore. And the last one, repatriation, is a little bit tricky. We just got the latest updates, which I can share with you. So before 2 months, 2 months ago, I may share a different idea, but now it's a very clear and in favor of foreign investors. So let's see, for repatriation, there are actually 3 categories. One is for principal. Your principal repatriation does not have any restriction. You can repatriate every day if you want, just based on the written application or instruction to your custodian. And for profit and liquidation is a bit different. Let's see profit first. There used to be a very strict requirement for profit repatriation. You need to provide written application and instruction. You need to provide the audit report, particularly for your investment profits issued by a PRC CPA. And you need to provide tax certificate for tax filing documents. Sounds very complicated. Yes, but starting from November the 1st, you just give the instruction to your custodian with a tax commitment letter. What I mentioned as the tricky part is the commitment letter, because the regulation was actually issued earlier, but during the clarification, SAFE, which is the China Foreign Exchange Control Regulator, they mentioned about what you need to mention in the tax commitment letter is you have fulfilled all tax responsibility. But the word have has caused a lot of confusion, because people think if I have fulfilled all responsibility, then I must have all the documents you need. So it doesn't really facilitate the profit repatriation. But just with 2 months ago, we got the Q&A from SAFE again, which clearly stated that for the profit repatriation, you only need to provide commitment letter, which will say that you will fulfill the tax responsibility for China. So the changes between have and will is a great changes, and only provide a commitment letter instead of fulfilling the tax requirements at the moment has provided a lot of facilitation for the foreign investors to repatriate their profit back to the country. So basically, partial repatriation has been facilitated and easier than before. And in terms of the third one, liquidation, it's exactly the same as before. So in terms of fund liquidation, you need to provide the same set of documents as required before. That's no change. Okay, so here are all the comparison between the old regulation and the new one. And we believe that with the new regulation in place, it will be much easier for foreign investors to do their investment into China in terms of all aspects, including your application, your daily operation, and repatriation. So that be a good news to the market. Sorry, problem from the audience. All right, let's move on to page number 5 then.
你们是几点开？因为我们等一下要出去看。
Hello,
3点
hello
钟有
host.
会要看，然后现在
3点不是有月度会议吗？你们还有其他会？
Hello host.
什么？你说3点钟这边要用？
不，我们要出去。
啊，出去无所谓嘛，我就是说你们可以就是碰一下头
碰一下，
对，碰一下就是
看明天有没有。
用苹果木经过长时间低温烹饪处理的 A5和牛。
Sorry, got some problem here. Okay, I go on with page 5. This is the overall application process. Actually, it will be useful for new QFII-RQFII applicants. But for existing QFII-RQFII investors, you don't have to know this because you've already completed. So in general, for investors who just want to invest into China via QFII-RQFII program, you can see the overall turnaround time at the moment is 10 plus 5 working days plus 10 working days. The 10 plus 5 working days means that CSRC regulatory approval need 10 days. And there is a safe filing, which needs 5 days. So in total, 15 working days. And the other 10 working days are used for the account opening, for both the external account opening in the market and the internal account opening with the custodian. So in total, 15 days plus 10 working days, that's 25 working days around over 1 month. So now the whole application process has been reduced to 1 month to 1.5 months, which is largely reduced from previously. It's like 3 to 6 months work. And the other things at the same time, you can apply for CIBM as well. As we mentioned, CIBM is part of the program under QFII. If you want to invest into China interbank bond market, you can submit the application at the same time when you submit to the safe for filing. So it took about 20 working days for PBOC to provide the feedback on your filing. But with our experience, it could be much shorter than expected. So usually they will complete it within 20 days instead of 20 days. Okay, so in summary, the whole application for QFII-RQFII will take you around 1 month to 1.5 months. Okay, lastly, the last page. So what I want to mention about the latest changes on QFII-RQFII has been completed. So I just use one very quick page to summarize the value proposition from Standard Chartered. Standard Chartered is among the top 3 foreign custodians in the market. We have the global coverage team with the local expertise in the market. And we have the best research and market intelligence and strong regulatory relationship. And we have the robust credit rating for Standard Chartered China, which is A+ for both S&P Global and Fitch ratings. So with that, I'm very happy to close my speech today. And I hope that if you have any questions or if you anything that we can help you follow up, you may just contact me or contact me via Nanhua Futures. So thank you very much. And I'll just pass it back to the host today.
Thank you so much, Jimmy. And actually, I have a quick question for you, if you don't mind me to ask.
Sure.
Yes. Okay. So according to this new QFII regulation, QFII will be allowed to invest the private equities, right? But at the same time,
what we say, yeah. Sorry, I maybe I need to clarify. What we say private equities is actually private investment funds. So it's for the equities in the secondary markets, not what we usually call the PE fund. Yeah.
Right. But at the same time, the China Financial Futures Exchange said that the QFII is only allowed to hedge when investing in stock index futures. So my question is, I guess, what will happen when a QFII invest in a private fund whose strategy is actually trading stock index futures?
That's a good question. Actually, what we have clarified so far. Sorry, I keep hearing some echo here.
No, you're good. You can go ahead.
Yeah. What we have clarified with the regulator at the moment is the private investment funds that QFII invest should have the same investment scope of QFII. Right. So what we talk about when QFII they consider to invest into private investment funds, the first thing they need to consider, or for the target fund they need to invest should consider, is they need to align the investment scope. So what we see here is some of the private investment funds, they started to change or to revise their existing contract with their investors because they need to make sure that for a QFII, they are qualified to invest into the private investment funds. So from that, what we can conclude is, if you invest into a private investment fund, if they can do anything, it must be within your QFII-RQFII scope. But to answer your question, I don't have the specific answer whether if you have any exposure on the private investment funds, can you do the hedge based on what you have on the funds? But I think that naturally for the private investment funds, they should have the hedging arrangement within the fund as well. I'm just wondering whether there will be any duplication if you are doing, but the funds themselves already have the hedging strategy. So that could be a problem. But I will take this question back and see whether there is any further clarification from the regulator as well. We can communicate on that later if you have any further update as well.
All right, I appreciate it. So thanks, Jimmy, for doing this awesome sharing. And I'm pretty sure our participants will have a lot of takeaways today. And now, Jimmy, please sit back, relax, and enjoy the rest of the session, all right?
Thank you, I will.
All right. In our second section, we will have Peter Xu here with us today to give his idea on RQFII introduction and the internationalization of Chinese capital market. Peter holds a bachelor's degree in economics, mathematics, and history from University of Toronto, Canada. Currently, he is working as the COO of Nanhua International Asset Management Company, in charge of RQFII business, offshore fund business, and asset management account business. Nanhua International Asset Management Company is one of the first Chinese institutions in Hong Kong to obtain the RQFII qualification. And it has 7 years of experience in RQFII management with the management scale